was really going through and figuring out payroll. One of the things that we did not do in chapter 12 is we didn't have any debits and credits. Okay? Nowhere in there when we did anything at all did I talk about debits and credits, or did we say anything about journalizing. We went through and we used some special documents to create payroll. We went through and did a payroll register where each employee was listed. We went through and did an employee's earnings record, which gives us the individual amount for each employee. We went through and wrote checks out. We did all of that, but nowhere in there, again, have we gone through and journalized it. So what we're going to be doing in chapter 13 is we're truly going to be going through and looking at what we have from a payroll register and how are we going to get that in the journal. We know we wrote a check out to cover all of our payroll. We want that one big check out to that payroll account. So we know we're going to have a cash credit for that amount. But we actually have to go through and record all of our information from our payroll register in our journal. For example, all of those deductions. We take out of people's paychecks the amount for federal income tax, we take out Social Security, we take out Medicare, health insurance, U.S. savings bonds, any of those. We take out of that, but that then becomes for our business a liability. So we have to look at everything in that deduction section of our payroll register. We need to make sure that we go through and we put that to an accounts payable account. Now, the most common mistake that we are going to find is typically the column heading from our payroll register. For example, we will have Social Security tax payable. Makes sense because we have a column that says Social Security tax. And we add the word payable at the end of it because it is something that we owe. Same thing for Medicare tax payable. U.S. savings bonds payable. Health insurance premiums payable. All of those we typically go through and just put the word payable at the end of it. The one that we do not is you are not going to find a liability that says federal income tax payable. Okay? What we are going to learn about in chapter 13 is the fact that as an employer, because we pay employee, there are taxes that an employer pays because they have employees. And there are 4 taxes an employer has to pay. Federal unemployment tax payable, state unemployment tax payable, Social Security tax, and Medicare tax. Okay? You as an employee pay Social Security and Medicare, but an employer has to pay that also. So what does that mean? They go through and look at all of their employees, and once you meet that tax base, and we talked about the tax base in chapter 12 of $87,000, once you get to that tax base, you don't need to pay for Social Security. The employer has to keep track of that, and if for one paycheck for all the employees that they had to pay $1,000 in Social Security, you came out of your check, the employer has to pay $1,000 also. So that means the employer would actually physically write a check for $2,000. $1,000 comes out of the employees, and then the employer has to match an additional $1,000. Okay? So there are 4 taxes an employer pays: federal unemployment, state unemployment, Social Security tax, and Medicare tax. But because we have this tax called federal unemployment tax payable, when you look at that column that we've been calculating using that tax table that says federal income tax, we don't have an account that matches it that says federal income tax payable. We are going to have an account that says employee income tax payable. Why? Because who owes that money? The employees. We take it out of their account. We, meaning the business, take it out of their paycheck and hold on to it and pay it for them. But that is truly the employee's responsibility. For example, if you owned your own business, you have to pay income tax also. It is reported differently because you own the business versus when you are an employee, because the employer takes that money out and pays it for you. But no matter what, you're always going to be liable for it. So the very first part that we're going to look at in chapter 13 is truly going to be looking at that payroll register, having our total earnings, having all of those deductions, and then going through and recording those into our cash payment journal so that our debits and credits equal. So if you don't have 13.1 open, let's get 13.1 open, please. All right. The first thing that I'm going to look at here is going to be just our set of instructions. So right here it tells us the Metro's payroll register has the following totals for the semi-monthly pay period, July 1st to the 15th. T accounts and a cash payments journals are provided below. Remember T accounts? Left side is debit, right side is credit. Okay. You get to have me help you through it. Aren't you excited?
Yay, we all get to do it on our own.
Well, so the first thing that we have to do is we have to go through and actually use our T accounts and analyze our information that's here and get our debits and credits to equal. Okay. So the first thing that I'm going to take a look at doing is total earnings. Now, when I look at total earnings, what they have given us in T accounts here is these are our accounts that we're going to be using. Okay? So when we look at our accounts, we have the accounts salary expense, employee income tax payable, Social Security tax payable, Medicare tax payable, and cash. So the first thing that they told us is they gave us an amount for total earnings. Now, it doesn't make a difference if we calculated total earnings based on incentive pay, like the challenge problem, which I did enter those points in this morning for those of you that did extra credit. Some of you may have saw your grade go up with that. So it doesn't make a difference if it's incentive pay based on the number of units produced, if it's going to be hourly, or if it would be salary. When we see the word salary expense, that relates to the fact of the total amount that the employees have earned before taking things out. So that would be what column on our payroll register? Total earnings. So we can see that total earnings in our set of instructions is going to be $12,600. So salary expense. Expenses are what type? Salary expense is what type of an account? Kind of gave you the answers. It's an expense. Expenses are on what side of the accounting equation? On the right-hand side. But they are affected our capital account. How does it affect our capital? Does it make capital go up or down?
Down.
Down. Okay. What is the decrease side of capital?
Debit.
Debit. So expenses are going to be debited. So for salary expense, we're going to debit that $12,600. Now the next one I have is federal income tax withheld. Now this is the one where students get thrown off because they want to write down the account federal income tax withheld payable. But there is no account. What account are we going to use? Employee income tax payable. Now bing, 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 boy. When you see the word payable, what do you automatically know? It's a liability, and liabilities have a credit balance. Okay? We are recording the fact that we have to pay this money for the employees. So we owe the federal government this money because we didn't give it to the employees. We took it out of their paycheck. We're holding on to it, but we owe $1,186 from all of the employees. So this is going to be a liability for our business. So we have to credit employee income tax payable $1,186. Same thing would hold true for Social Security tax. You notice that this account heading is a lot similar to the columns. It is Social Security tax payable and Medicare tax payable. So we have $781.20 and $182.70. Those are both going to be credited on our T accounts. Do our debits and credits equal? Not even close. What do we not have? Cash. Okay. Remember, we calculate the amount that we pay our employees by taking our total earnings, and from that we subtract all of our liabilities, or the amount of our deductions. So what we have listed here is we saw that we put salary expense is going to be our total earnings. So we need to subtract from that our employee income tax payable, Social Security tax payable, and our Medicare tax payable. The difference then is going to be cash. Is it going to be cash debit or cash credit?
Credit.
Credit for how much?
10,450.
10,450. Or if you really had a payroll register open, it would be the amount in your net pay column. Does that make sense? You already have that calculated because that's the amount that you wrote out for that one check to the payroll account. So we just put it in T accounts. Guess what we get to do next? We get to go in a journal and journalize. I'm so excited. We haven't done that in a long time. Like 2 weeks. Haven't seen a journal. After we journalize, then we get to post. Woohoo! Not on this assignment, but normally. So what we have to do is we have to journalize this. We're going to journalize this as of July 15th of the current year. What's going to go first? Our debit, which is salary expense. Our check number is going to be C455, and that is given to us right in the directions. I forgot something. How about we get going and then we'll give you a pass on that, okay? So we're going to look up here at salary expense. Salary expense is $12,600. Now, is it important that we list our liabilities in a certain order? Not alphabetical. How you are going to list them? Nope, not biggest to smallest. In your payroll register, you're going to list your deductions from left to right. Okay, so the first deduction that you're going to have is going to be your federal income tax withheld. Then it's going to be Social Security, then it would be Medicare, then it would be health insurance, and then it would be other. If you don't put it in the right order, Aptly will mark it wrong. Can you get points back for that?
Yes.
All you need to do is print out the assignment that would mark it wrong, and you need to tell me using accounting words why you should get credit for it. Because Aptly marks things wrong because they say it has to be this one account in that spot. And if it's not there, it says wrong. But as long as you had the liabilities there, it doesn't really matter. But you have to put your debits first. I won't accept you putting your credits first. Does that make sense? So the next one that we're going to put in is going to be employee income tax payable. And that'll be $1,186. Then it'll be Social Security tax payable for $781.20. And then we're going to have Medicare tax payable, $182.70. What did I miss? Cash. Does it matter where the cash goes?
Yes.
Cash always goes on the first line. So when we take a look at this journal, on line 1 of the journal, going all the way over here on the right, we have to put in our cash credit amount. Okay, and our cash credit that we calculated is going to be $10,450.10. And I have a green circle, which means I did it all correct. Isn't that amazing? Application problem 13.1 is just a smidge different because you don't have your T accounts. What you have here is you have Dana's payroll register for 2 semi-monthly pay periods, July 1st to the 15th and July 16th to the 31st. Typically, you wouldn't go through and journalize 2 payrolls right in a row because you would be doing things in between. But because this is the skill that we're learning, we're going to go through and journalize 2 pay periods. So what we have is on this first column here is this is our numbers that we have for our July 1st through 15th payroll. And you will notice that these columns are very similarly laid out to what you would find on the payroll registry. You just don't have all the different employees. You have total earnings, federal income tax, Social Security tax, Medicare tax, other, and total. Now, for the other column, you will notice that there is a letter B there. Down here below your whole table, it does say other deductions. B is U.S. savings bonds. So your account title that would go with that would be U.S. Savings Bonds Payable. Am I going to journalize the $1,398.21, which I'm finding here under total deductions?
No.
No. All of those are going to be done individually because I'm going to be going through and journalizing federal income tax, Social Security, Medicare, and other. So do not use this $1,398.21 or that $1,184.06 because that really is the total of your deductions. So you're just going to go through and journalize those 2 pay periods based on your numbers from here. That is your assignment. And we should have more time on this chapter, so I am looking for your outline for chapter 13. I do realize I did not do one on chapter 12, but I am expecting an outline for chapter 13.